Alright, so I'm going to run through income tax today. So everyone in Ireland with an income has to pay income tax. It is deducted from their income and paid over to the government. It's collected by the revenue commissioners is who collects tax in Ireland. It's deducted from your salary, given to the revenue commissioners, and then the government uses it for whatever. So I'm just going to take you through two income tax calculations today in full. So first up, Peggy earns €50,000 per annum, per year. Her standard rate cut-off point, sometimes shortened to SRCOP, is €32,800. We'll talk about what that is in a second. The standard rate of tax is 20%, and the marginal or higher rate of tax is 40%. Her tax credits are €3,300. What is her net or take-home pay? So her income, her gross income, before we take away any tax, is €50,000. We're going to subtract tax away. That's what we have to do, is to calculate that and get her net or take-home pay. Okay, so I'm just going to lay all these tax calculations out the same way, and the solutions I give to you will be laid out like this. So I've got what is called gross income. Okay, so gross just means before you take away anything. Net is after you take everything away. Okay, so gross income, I'm just going to give myself kind of two columns here. So her gross income is €50,000. That's before I take any tax away. What I'm going to do then is the tax calculation. Okay, so I'm going to calculate what's called the gross tax. Okay, so this is where this standard rate cut-off point comes in. So of her €50,000 income, she is going to pay tax at 20% on some of that, and at 40% on the rest of it. Okay, so up to a certain point, up to this standard rate cut-off point, you pay a lower rate of tax, 20% in this case, and then however much of her income is above 32,800, she has to pay tax at 40% on that. Okay, so the first thing I'm going to do is take her €32,800 standard rate cut-off point, and I'm going to charge tax on that at 20%. Okay, so the first thing is €32,800 standard rate cut-off point multiplied by 20% standard rate. So 32,800 multiplied by 20% is 6,560. Okay, so that's an amount of income tax that she's going to have to pay. Now, the marginal or higher rate of tax is 40%. So anything she earns above 32,800, so around about €18,000, a little bit less, she has to pay tax on that at 40%. So what we do is 50,000, her total income, take away the 32,800 that she's already paid tax on. So whatever this is how much she earns above her standard rate cut-off point, and we're going to multiply this by 40%. Okay, so just the 50,000 take away 32,800 is 17,200. Okay, so €17,200. We're going to multiply that by 40%. And that is 6,880. Okay, so of her 50,000 income, 32,800 is taxed at 20%, and the rest of it, the 17,200, is taxed at 40%. Okay, so just tax the standard rate cut-off point at the lower standard rate, and then anything above that, so take the standard rate cut-off point away from the total income, that's taxed at the higher rate. All right, So these are both amounts of tax. Okay, they're just charged at slightly different rates, but they are both amounts of tax. So I'm going to add those two together. So the 6880 plus 6560, and that is 13440. Okay, and that's called gross tax. So you do need to learn these words kind of down through the question. All right, I'm going to just kind of highlight a couple of keywords as we go through it, and that gross tax is one of them. So you can be asked in a question, just get the net take-home pay, and you do the calculation in full. Some questions, though, will break it up into individual parts, and they'll ask you for the gross tax. So you need to be able to kind of pick out which number in the calculation is the gross tax. Now, this gross tax of 13440, that's how much tax that Peggy would have to pay, except in Ireland we have this system called tax credits. And tax credits are basically a discount off your tax bill. Okay, so without credits, she'd have to pay 13440 in tax, and that will be taken away from her income. But the government is giving her these tax credits. So these are a discount off her tax bill. So I'm going to take this €3,300 away from her 13440. So your tax credits are taken away from the amount of tax you have to pay. As I said, like a discount off your tax bill. So tax credits, which are minus 3,300. So I'm just putting the negative numbers in brackets. So 13440 take away 3,300 is 10,140. And that's the amount of tax that she actually has to pay. Okay, so it's after the credits are taken away. So that's called tax payable, or you'll also see it called net tax sometimes. Okay, so gross means before you take something away, net means after you take something away. So before I take away the credits, gross tax. After I take away the credits, net tax. So this €10,140, that's the amount she actually has to pay over in tax. So that's what I'm going to take away from the gross income. So the 50 take away the 10,140. So that's 39,860. All right, and that is her net pay or her net income or her take-home pay. All right, all those mean the same thing. So net income. All right, so again, I start with the gross income. I start with the amount of income or salary I'm given in the year. Okay, I tax that at 20% and at 40%. So some of it at 20%, 32,800, and the rest of it, 17,200 at 40%. So these two amounts here, the 32,800 and the 17,200, they should add to the 50. So I'm taxing her full income. All right, they're both amounts of tax. So I add those together, I get 13,440. That's how much tax she would have to pay. But she has these tax credits. It's a discount off your tax bill. If we take that away from the gross tax, we get net tax or tax payable, because that's the amount of tax she actually has to pay over, 10,140. Because that's tax she's paying, we take it away from her income. And of her €50,000 income or salary, she has 39,860 left over after she's paid tax. All right, so I'll just do one more example. All right, so this one is just on a monthly basis. So that one was annual, this one's monthly, but we do it the exact same way. Obviously the numbers are just going to be a little bit smaller in this example. So Elaine earns €4,000 per month. Her monthly standard rate cut-off point. Okay, I would say they normally write the full word out in the question, they won't abbreviate it, but just if you see that abbreviation, that's what it means. So her monthly standard rate cut-off point is €3,000. The standard rate of tax is 20%, and the marginal rate is 41% this time, so slightly different. Her monthly tax credits are €350. what is her monthly tax pay. Okay, you don't need to know any of these numbers, like what the standard rate or marginal rate of tax is, or what's the current standard rate cutoff point that people get. You'll be given all those numbers in any question. Okay, you just need to be able to know what to do with them, and as I said, you should know those words down through the question. So I'll lay this one out the exact same way. So I start with gross income. And for Elaine, that is €4,000 per month. Okay, so gross income of €4,000. I'm going to do my tax calculation then. So her standard rate cutoff point is 3,000. Okay, so it's that €3,000 that gets taxed at 20%. So 3,000 multiplied by 20%, that's €600. And then her actual income is €4,000. So I've already taxed 3,000, so I have another 1,000 to tax. Okay, so the first 3,000 of her income is taxed at 20%. The rest of it, so the other 1,000, is taxed at 41%. Okay, so it's the 4,000 take away the 3,000 multiplied by 41%. All right, so €1,000 multiplied by 41%, €410. Okay, so add the two amounts of tax together then, and you get 1,010, and that's our gross tax. All right, so again, that's how much tax she would have to pay, but she gets these things called tax credits from the government, and they are a discount off her tax bill. So I'm going to take those tax credits away. So take away the €350. So 1010 take away 350 is 660. And that is your net tax, or else tax payable. And say no both of those terms. Okay, so the tax that's actually payable, that's taken away from her gross income. So take 660 away from the 4,000. So 4,000 take away 660 is 3,340. And that's the net pay, or take home pay, or net income. So take home pay. Okay, so her income is €4,000. She ends up paying tax of 660. So 3,340 is what she actually has to spend when she gets paid. All right. So again, just gross tax, I would say you need to know what that is. So you could be asked just what is the gross tax, and that's the number they want you to give. Net tax or tax payable, you need to know what that is. Okay, so that's gross tax, take away tax credits gives you the net tax. And then just the take home pay then is your answer to these questions. All right, so just know those kind of three kind of keywords. As I said, they might just ask you for this number and you do the full calculation and give that final answer, but they might just split it up into three parts maybe and ask for this number, and this number. And again, just to run through this one real quick, her gross income is 4,000. Of that 4,000, 3,000 is taxed at 20%, and the rest will be at the marginal rate. So 4,000 take away 3,000 is 1,000 by 41%. So we see of her 4,000 income, 3,000 is taxed here and 1,000 is taxed here. Okay, so she does pay she does pay tax on her entire income. We add those two amounts of tax together, we get 1,010. We take away the tax credits I'm given in the question, that gets me tax payable. I take that away from her gross income, and that's her take home or net pay.